Welcome and thank you for standing by. At this time, all participants are in a listen-only mode until the question and answer session of today's conference. At that time, you may press star 1 on your phone to ask a question. I would like to inform all parties that today's call is being recorded. If you have any objections, you may disconnect at this time. I would now like to turn the conference over to Mr. Clint Hastings. Thank you. You may begin.
Good afternoon or good morning, depending on where you're dialing in from. Thanks for joining us for our third of a series of 3 webinars on the CDFI Rapid Response Program. A couple of weeks ago, we had a pre-application webinar to inform organizations on some steps that they could take in order to be prepared to apply for CDFI RRP. Last week, we had a in-depth presentation on the CDFI Rapid Response Program, followed by a brief question and answer session. Today's webinar is going to be somewhat similar, but a little bit different. We're going to have some prepared comments and go over a brief presentation, but the intent of today's call is to leave plenty of time for questions and answers around this new program, as we assume most interested applicants have had an opportunity to familiarize themselves with the application material and the RRP NOFA and may have some questions outstanding that aren't yet clarified in our guidance documents. So with that, you should see the CDFI Fund website on your screen right now. I'm going to show you how to navigate to the section of our website with application guidance materials for the CDFI RRP. You can access it a few different ways. Like our other programs, up towards the top of the website, we have the Programs and Training menu. You scroll down to Programs, and you can click on CDFI Rapid Response Program. There's also a link down here in the middle of the page. And finally, if you want to have something a little shorthand that you can access without clicking links, you can just go to cdfifund.gov/RRP, and that will bring you to the CDFI Rapid Response Program webpage. You'll see some basic information about the program, some links to previously recorded webinars. You'll see right here. We had the pre-application webinar that you can click and view right here. And then the webinar from last week with the more in-depth presentation. So for those of you that missed last week's webinar, I would encourage you to go back and view that recording on YouTube and see our full presentation. Next, you've got the application timeline for the CDFI Rapid Response Program. And finally, down here at the bottom, we've got the application materials for the Rapid Response Program. All of these materials should be familiar to you if you've applied for the CDFI program or NACA program in the past or considered applying for one of those 2 programs in the past. These documents are largely based on material that we had previously created for those programs, so most of the concepts should be familiar to you. One thing that I want to note is that we recently updated the RRP Frequently Asked Questions document. We'll be going over this document in further depth later in our presentation or our comments. But if you've already accessed the FAQs and want to go back to see what we've updated, you can easily find the new questions and answers by searching for the neon green highlighted text. You'll see that. And next, I'm going to take a moment to show you how to launch and access a CDFI RRP application if you have not already done so. This view should be familiar to most of you. This is the general layout of AMOS once you log in. You're going to access your organization profile. On the organization profile page, you're going to scroll down to the program profiles, and you're going to click the link next to the CDFI NACA text to access your CDFI NACA program profile. It's important to note that this is the existing program profile you've used to create CDFI or NACA program applications in the past. It is not a new program profile. And then down here at the bottom, there are going to be two different buttons, one to launch an FA or TA application, and then next to it, a button to launch a new CDFI RRP application. I've already used this profile to create an application, so I'm not going to click that button, but this will be where you create your new application right here. Another thing that we've gotten a few questions on from CDFIs out there is they've created an application, they've maybe filled out a few sections, they've logged off for the evening, they come back a few days later, they click this link right here, and they get to this page and they say, wait, my application's disappeared, or I can't access it, all I see is this text. That's because you don't need to click the application type to access your application once it's been launched. You need to click this series of numbers out next to the CDFI Rapid Response Program application. So I'll do that. I'll click that link. This opens up the CDFI RRP application. This should look very familiar to you if you've created or submitted a CDFI program or NACA program application in the past. As I stated earlier in this call, we've leveraged our existing resources to reduce burden for both the applicants out there, most importantly, and the CDFI fund and its review process. So out to the left, you'll see the table of contents. Again, most of these sections are going to be very, very similar, if not exactly the same, as to what you've seen in the past in your CDFI program or NACA program application. One thing to note, if you haven't gotten too far in the process of completing your RRP application, is that this is a very straightforward and streamlined application. There is no narrative, and we've removed a lot of the sections that you would typically have to complete for the CDFI program or NACA program. So I'm just going to point out a few of the most critical sections of the application, even though they're all required. The first of which is the application financial data, and this really drives the entire RRP application, or a huge portion of the RRP application. Again, these fields are very similar to the CDFI program and NACA program application fields in the application financial data. But the big difference is that we're not collecting any projected years of financial activity. We're only collecting the 3 years of historic financial data and a current year of financial data. And while all fields are important and will be used to analyze the financial health of our unregulated organizations, there are 3 fields in particular I want to point out because they determine the maximum amount of a CDFI RRP award that you can request. Those 3 fields are all in the most recent historic fiscal year, so historic 1. They are the on-balance sheet loans closed in an eligible market and or target market, the on-balance sheet loan guarantees made in an eligible market and or target market, and finally, the total equity investments closed in an eligible market and or target market. So if you sum up the values of those 3 fields, an organization can request 150% of that amount. From there, I'll take you to the CDFI Rapid Response Program request section of the application. And if I had filled out the application financial data, you would have seen 150% of the sum of those 3 fields down here at the bottom. So I would enter my total request amount up to 150% of the sum of those 3 fields, or a maximum of $5 million, down to a minimum award request of $200,000. On this section of the application, you'll also complete the CDFI RRP first payment amount request. And if your organization receives an award, this will be the initial payment made from the award. Finally, I'm going to point out the compliance evaluation questions. These are the same that exist in the CDFI program and NACA program applications. And the answers to this question will be used to calculate a composite compliance evaluation score for each of the CDFI RRP applicants. Beyond that, the application largely consists of organization data where you're just confirming things like your organization's name, designating points of contact, associating an SF424 record with the application, so on and so forth. Again, no narrative, an application that's designed to be very streamlined and reduce applicant burden. Excuse me. From there, we're going to take a few moments to share some information about the CDFI Rapid Response Program that we've got lined out in a few slides. So right here on this page, we've got a layout of the entire presentation that we made last week. I won't be hitting all of these sections of the presentation today. If you want to see the presentation, the full presentation that covers all 5 sections of this document, you can go back to the recording of last week's webinar and view that via our website. You can also access the full slide deck on that same section of the CDFI Fund website at cdfifund.gov/RRP. A couple of things that we won't be covering today are instructions on how to enter data into an application or questions about the CDFI and NACA program financial assistance or technical assistance open application period. Most of you know this information, but for those of you that are joining us for the first time, the CDFI Fund's mission is to expand economic opportunity for underserved people and communities by supporting the growth and capacity of a national network of community development lenders, investors, and financial service providers. And our vision is an America in which all people and communities have access to the investment capital and financial services that they need to prosper. We also have several additional programs in which we achieve our mission and vision in addition to the CDFI program and NACA program, and now the CDFI RRP programs. So, a little bit about the CDFI Rapid Response Program. The Consolidated Appropriations Act of 2021 provided $1.25 billion in supplemental appropriations for the CDFI Fund to provide grants to CDFIs to support, prepare for, and respond to the economic impact of the COVID-19 pandemic. Additionally, Congress required that a minimum of $25 million of this appropriation is awarded to benefit Native communities. CDFI RRP is designed to quickly deploy capital to certified CDFIs through a streamlined application process and review process to provide certified CDFIs with resources to help counter the economic impacts of COVID-19 in distressed and underserved communities. To meet these expedited award deadlines required by Congress, the CDFI Fund will utilize and leverage its existing CDFI certification and FA and TA application evaluation processes, as well as its existing information technology infrastructure. The CDFI RRP implements statutory language to make awards using a formula approach that takes into account criteria such as certification status, financial and compliance performance, portfolio and balance sheet strength, a diversity of CDFI business model types, and program capacity. The program is designed to provide awards to the majority of applicants. Per the CDFI RRP NOFA, we expect to award an estimated 1,000 awards with an average award size of $1.2 million. And as I've noted a couple times in this presentation, the application should be familiar to CDFIs that have applied for CDFI or NACA program awards in the past. So, who's eligible for the CDFI RRP? First, you must be a certified CDFI as of the date the CDFI RRP NOFA was published in the Federal Register. And this date was February 26th of 2021. Next, a depository institution holding company or its bank subsidiary can apply, but not both. If both apply, the bank subsidiary will be deemed ineligible and the CDFI fund will review the application of the holding company. Also, the CDFI fund will not approve an RRP award for an applicant that has a Community Reinvestment Act or CRA assessment rating of below satisfactory on its most recent examination, and that's if applicable. Additionally, all CDFIs must have a minimum financial health and safety score of at least a 4. You can see additional criteria, eligibility criteria in the RRP NOFA. So, about the minimum of $25 million of RRP funding that will be awarded to benefit Native communities. In order to qualify as a CDFI that serves a Native community or Native communities, 50% or more of the applicant's past activities must be directed to Native communities, and the applicant's certification target market must have an investment area target market that is also a geographic area of federally designated reservations, Hawaiian homelands, Alaska Native villages, or U.S. Census Bureau designated tribal statistic areas, and or an other targeted population of Native American, Alaska Natives living in Alaska, or Native Hawaiians living in Hawaii. All RRP awards will be in the form of a grant. That means no matching funds are required for any CDFI RRP applicants. The minimum CDFI RRP award will be $200,000 and the maximum award will be $5 million, although we don't anticipate making awards that large. As I said earlier, each applicant may request up to 150% of its total financial products closed in an eligible market and or target market for its most recent historic fiscal year, or the minimum award amount of $200,000, whichever is greater. So in essence, or not in essence, but if an organization, for example, has total financial products closed in an eligible market and or target market in the amount of $1 million in its most recent historic fiscal year, that organization would be eligible to request an award size of up to $1.5 million. Similarly, an organization that closed $2 million in its most recent historic fiscal year would be eligible to request a $3 million RRP award. On the other end, our smaller certified CDFIs that don't have significant amounts of financial products closed in their most recent historic fiscal year can still request the minimum award amount of $200,000. So if an organization, let's say, closed $50,000 in financial products in an eligible market and or target market in their most recent historic fiscal year, they'd still be eligible to receive and request an award of $200,000, even though 150% of $50,000 would only be $75,000. Additionally, applicants without audited financial statements may not request more than $200,000. And it's important to note that this is only applicable to our unregulated organizations that apply. So for our banks and credit unions, We've had some questions from organizations where they say, hey, wait, we can't submit, we're not required to submit audited financial information with our application. Does that mean we're capped at $200,000? No, that's not what that means, and we clarified that in our frequently asked questions document. It's important to note that an organization does not have to request more than the minimum award amount of $200,000, even if they qualify for a larger request amount. So, all applicants that receive a CDFI RRP award must deploy and expend the full award amount during the period of performance. And applicants that choose to request more than the minimum award amount will have an additional performance goal related to the amount of financial products that they close over the period of performance. The eligible activities in the eligible lines of business are the same as in the CDFI program and NACA program. One thing that's a little bit different is the eligible activities for the RRP are a bit of a hybrid of the Financial Assistance Awards and the Technical Assistance Awards. So we're calling the 5 categories that are associated with Financial Assistance Award activities supporting the provision of financial products and services. And those are financial products, financial services, loan loss reserves, development services, and capital reserves. Additionally, organizations can expend a portion of the award, or in the case of organizations that receive the minimum award, the entire award, in the TA categories, which we are calling the categories supporting operations. And those are compensation for personal services and fringe benefits, professional service costs, travel costs, training and education costs, equipment, and supplies. You'll note that caveat at the beginning of the second bullet, in which we say that the greater of $200,000 or 15% of the grant may be expended in these categories. May be expended. Organizations are not required to expend any of their award for categories supporting operations, but they do have that flexibility. So if an organization has a $1 million award, they could expend up to $200,000 on these 7 categories supporting operations. Or if they had a, let's say, an award of, $2 million, that would be $300,000 that they could expend on these 7 categories. But if the organization wants to expend the full amount in the 5 categories supporting the provision of financial products and services, that is fine. I won't go over all of the eligible lines of business, but as I said, they are analogous to the eligible lines of business in the CDFI program and NACA program. Regarding the period of performance, the period of performance is the 2 full fiscal years, and applicants or recipients 2 full fiscal years after the award announce date. So, for example, in a hypothetical situation, let's say the CDFI fund announces RRP awards in June, and your organization has a 9/30 fiscal year end date. Your organization's period of performance would end on 9/30/2023. And there will be annual reporting on the uses of funds and progress towards the performance benchmarks. So about the performance benchmarks, all recipients, regardless of award size, will be required to expend the funds by the end of the period of performance on eligible activities. So organizations will be required to expend 90% of their initial payment by the end of the first year of the period of performance, and then by the end of the second year of the period of performance, they will be required to have expended the entire amount of the award on eligible activities. Recipients that receive more than the minimum $200,000 award will also have a requirement to deploy financial products. by the end of the first year of the period of performance, the CDFI RRP recipient must have closed the equivalent of 50% of their award amount in financial products in an eligible market and or target market. And by the end of the period of performance, they must have closed the equivalent of 70% of their award amount in financial products in an eligible market and or target market. And one important thing to note is that a CDFI RRP recipient can satisfy this performance goal and measure using either funds from the CDFI RRP award or other funding available on their balance sheet. So in essence, an organization could receive a $1 million award. They could allocate that award to loan loss reserves and then utilize other existing capital on their balance sheet to make loans or equity investments, and that would satisfy this requirement. Native CDFIs that indicate they will serve Native communities will have to deploy their financial products in Native communities. One thing also to note about the CDFI RRP performance goals and measures is that any loans closed in support of satisfying the RRP PGNMs will not be eligible to be used to satisfy existing or future CDFI or NACA program financial assistance performance goals and measures, and vice versa. So finally, there are a few critical deadlines for applicants to consider over the next couple of weeks. March 22nd at 11:59 is the last day to enter EIN and DUNS numbers in AMIS, as well as submit your SF-424 mandatory form in grants.gov. One thing I want to highlight is that the CDFI program and NACA program SF-424s are also due on March 22nd, 2021. Organizations that wish to apply for both the CDFI or NACA program and the CDFI Rapid Response Program must submit separate SF-424s with the correct funding opportunity number on each form in order to be eligible to apply for both programs. So don't get tripped up thinking you submit one SF-424 and you'll be eligible to apply for all programs. The next day, on the 23rd at 5 p.m. is the last day to contact the CDFI Fund with questions about CDFI RRP. And the RRP application is due in AMIS on March 25th at 11:59 p.m. You'll have until 5 p.m. that day to submit service requests to the AMIS Help Desk regarding IT issues that you may be experiencing with your application. So from there, that's the end of the slides we're going to share today. We're going to go very quickly over to the RRP FAQs. And share some of the most frequently asked questions that we've received from CDFIs out there. Amber, will you cover the first couple of questions that we've added to the RRP FAQs?
Yeah, absolutely. So I actually can't read the ones on your screen. I don't know if other people can, but one of the things that we did is we did highlight that we've added some new FAQs there in 3 different sections: the CDFI RRP application interface, the design, and attachments. So just highlighting that there's some technical questions in here, like where's the button, which you already talked about, and how to get to the application, and again, if there's things around your SF-424. So these are just really commonly asked technical questions. If you have these questions, please go to the FAQs first, and then the next questions are really programmatic around what we talked about as a clarification on the size of the request, around $200,000 if you are a not regulated entity. And what does it, the most important one that I'd really like to highlight is what does it mean to expend the fund? So you mentioned in the PG&Ms that you'll have to spend all the money. And so what does it mean to expend an award? So with the initial payment, you have to expend 90% in the first period of performance. And what does that mean? Well, all CDFI fund awards are considered expended once the recipient allocates them to one of the 12 eligible activities. So what does that mean? Right? You ask yourself, what does it mean to expend? And really what we're talking about here is when you allocate it. So for a loan loss reserve, once you allocate that all or part of the award to loan loss reserves, it's considered expended, and that's what you report and you use as a fund report during the reporting period. In other words, you do not have to wait until you actually have losses on that load to consider them expended. Similarly, with a financial product, say you have a dry close because it's a construction loan, soon as you have committed those funds to that particular loan or allocated it to that particular loan, even if the funds haven't been dispersed, it counts. So that's the most important programmatic highlight FAQ that I wanted to touch on. And we can, I think, open it up to questions, Clint, if that works for you.
That's great. Chelsea, can we go ahead and queue up our first questions?
Sure. If you'd like to ask a question, please press star, then 1, unmute your phone, and record your name clearly when prompted. One moment while we wait on our first question. The first question is from Rob Wagner. Your line is now open.
Can you tell me the difference between the eligible market and target market, please?
Yeah, I can take a stab at that. So this is Amber Bell. So the eligible market is this really great concept that we like to call is that anything that's kind of a pre-approved target market. So our statute says that that target market is an investment area that has certain characteristics. For example, the percent of unemployment or the amount of percent of people in poverty. So if you look at those characteristics of the census tract, that is kind of a pre-approved investment area, and that would qualify under the eligible market category. The other categories are called OTP, or other targeted populations. So, for example, a low-income person, regardless of where they live, or an African-American, Hispanic, Native American, Native Hawaiian, Alaska Native, for example. So those are those kind of categories that we have. Well, with the target market, your CDFI is approved for one of those categories but has a geographic boundary. So, for example, say you're operating in Nebraska and your target market is low-income, an OTP of low-income people in Nebraska, but you want to expand to Kansas, and you make a loan in Kansas. That is considered a low-income person in Kansas would be part of your eligible market, but not your target market.
Yes.
So what we're trying to do is create the biggest Venn diagram possible. So people who have traditionally been excluded from access to capital, anywhere without the geographic boundaries. Does that help?
Yes, that's helpful. Thank you.
Great.
And for those of you that would like to have a reference point to point back to after this webinar, you can find a definition of eligible market in the RRP NOFA on the bottom of page 11828.
The next question is from Richard Page. Your line is now open.
Thank you. Two really quick questions. One, is this program, or should I say the drawdown of funds in this program subject to the maximum limit of $750,000 in 1 year to not require a separate audit, or is this exempt from that? That was the first question.
Yeah, so that is not the CDFI funds call. That's statutory. That's the UAR or the Uniform Administrative Requirements, and it's not the amount that's drawn down. It's the amount that's expended in a year. The CDFI fund and this program is in line with the UAR, and you have to follow those requirements.
Perfect. And actually, I had a question relating to the discussion around. It's a little bit confusing, but it may be specified in the FAQ. You kind of quickly went through the differences between the minimum award amount and amounts in excess of that with respect to the performance period. And I think I heard you say that if you're requesting more than the minimum, then the performance requirements are 50% of funds expended in the first performance year, 70% by the end of performance year 2, and presuming that the performance years line up with the fiscal year chart that you have, that would essentially mean that if you have a financial institution that has a fiscal year that is a calendar year, if the award was announced in June, the end of the first period would be December 31st, 2022. Is that correct?
Yeah, your point around the end of the first fiscal year is correct. I can provide a little additional clarity, or at least attempt to, around the performance goals and measures. So all organizations will be required to expend in an authorized activity category, an eligible market or target market, 90% of the initial payment by the end of the first year of the period of performance. So if an organization's initial payment is $500,000, by the end of the first year of the period of performance, they will have been required, or they will be required to expend $450,000 of the award in an authorized activity category. And then by the end of the period of performance, so by the end of the second year, the organization will be required to expend the full amount of the award in one of the authorized activity categories. So if they got a $1.2 million award, they'd have to expend the full $1.2 million by the end of the period of performance. And so if an organization requests and receives more than a minimum award, there will be that additional lending-related PG&M. And so that's not tied to expenditure of the award dollars. It's simply related to the amount of financial products that an organization closes over the period of performance, whether they're using RRP award funds or other available funding on their balance sheet. And so if an organization has a $1 billion total RRP award, they will be required to close at least $500,000 in financial products in an eligible market or target market by the end of the first year of the period of performance, and then $700,000 or 70% by the end of the period of performance. And like I said, that can be satisfied using either the award funds or other available capital.
And that's irrespective of whether or not you're using the award funds for lending capital or for loan loss reserves. Same threshold applies. Okay, thank you.
Right. Mm-hmm.
The next question is from Michael Sloss. Your line is now open.
Yes, hello. My question is about the first payment amount request when you were going through the application. That's a cell that has to be filled in. But is that's for up to us to decide, or you're going to automatically calculate that?
That's for each organization that's applying for an award to decide. And the rule, and this is in the guidance and the NOFA, is that the initial payment or first payment amount request should be equivalent to what the organization reasonably expects to expend within the first 12 months of the award.
Okay, thank you.
Mm-hmm. You're welcome.
The next question is from Tip Birch. Your line is now open.
Yes, my question is, does a bank enterprise award, is that considered a federal grant in the compliance questions? And thus we should answer that question as yes, we have received a federal grant.
Yes, it is.
Okay. And then in conjunction with that single audit A133, as long as the grant was less than $750,000, we would not have needed to comply with that the A133.
It's a little bit more nuanced than that. It's the amount of federal funding spent within a year, within a fiscal year.
Okay.
So an organization in theory could receive a $1 million award and spend $500,000 of it in one fiscal year and the other $500,000 of it in a subsequent fiscal year. And assuming they had no other federal funding that they were expended, they would not be above that threshold.
Thank you.
Mm-hmm.
As a reminder, if you'd like to ask a question, please press star 1, unmute your phone, and record your name clearly when prompted. The next question is from Phoebe Quattrucci. Your line is now open.
Hi. Thanks so much for holding this session. It's been really helpful. I have a client who started operations in 2017 or 2018. They started lending, and they have internally prepared financial statements for that year, but they have audited statements for 2019. I'm assuming that they are allowed to apply for more than the minimum if they've got audited statements for 19. Is that correct?
Yes, that's correct.
Yeah. Okay. Thank you very much.
The next question is from Quanice Mims. Your line is now open.
Hi, thank you all for holding this webinar. Our organization name changed at the beginning of the year, so I have submitted service requests in AMIS, and I've also sent emails. I've submitted the documentation, the material event form, and the certificate of merger, and all of this started back in January, but I have not received confirmation from you all that anything has been approved, and I would prefer that it's approved, or I would hope that it would be approved before we have to submit this application. Any guidance that I can get from you all to know if there's anything else that we need to do on our end would be greatly appreciated.
Hi, this is Elizabeth Hoffman. I'm one of Clint's colleagues on the CDFI NACA RRP program team. First, I just want to assure you that a name change is not going to be a problem. The thing we really emphasize is that your DUNS number and your EIN numbers need to match between your SS424 and AMIS. But if you could go ahead and give me your name and organization one more time, I'd be happy to check in with that about your issue, since you said you submitted a little while ago.
Thank you. My name is Kiwanis Mims, and the organization name in AMIS is under the Real Estate Council Community Fund in Dallas, Texas.
Great. I can look into your specific name change, material event forms, et cetera, that you've submitted, but rest assured that if the name change is not processed before the end of the application period, that will not be a problem.
Thank you. I appreciate it.
You're welcome.
The next question is from John Coggins. Your line is now open.
Hi, thank you. You touched on this question a minute ago, but just as a clarifying question about the first payment amount request, is there an expectation for either a minimum or a maximum amount, sort of in terms of the percentage of the total award, that you would expect to see in that initial payment request?
No, it really ties back to that guidance that I gave earlier about the amount of funding that the organization reasonably expects to expend within 12 months, the first 12 months of the award. So if that's $300,000 and you request, $1 million or more, something along those lines, that's fine. That's not going to be part of our analysis. We want it to be reasonable. We want organizations to first, be in a position where they're sure that they can expend the amount of the initial payment, 90% of it, within the first year of the period of performance, and then expend the full amount of the award by the end of the period of performance. And so we'll leave that up to your discretion as an organization, just knowing that you'll have those two performance benchmarks to meet, but it's not going to be part of our analysis or anything like that. So we don't have any guidance, for what percentage it should be or anything like that.
Great. That's super helpful. Thank you.
You're welcome.
The next question is from Andrea Boykins. Your line is now open.
Yes. My question, I think you may have answered this, but going back to that 12-month period, does the first year, that 12 months, is that from the date that you received the grant?
No, that's from the date of the award announcement.
Okay, so from the date of the award announcement, you have...
Yeah, you can start incurring expenses before, or incurring expenses and also, lending towards those PG&M goals as of the date of award announcement.
Okay, so you have 12 months from the date of the award announcement to meet that first performance goal.
It's actually going to wind up being a little bit more than 12 months for organizations, but just the rule per the Uniform Administrative Requirements, which controls grants across the federal government, is that the initial payment should be 12 months, after the award announcement. But realistically, you're going to have a little bit more than 12 months to meet that first benchmark.
Okay. Thank you so much.
Mm-hmm.
Thanks, Clint, for that clarification. It was perfect.
The next question is from Mark Kaufman. Your line is now open.
Hi, I'm sorry. Thank you for doing the call, and I'm sorry to be dense about the 90% and the 50% and the 70%, but can you just run through that again with one without moving the numbers around? I guess I'm confused that if you got, I say round numbers $1 million, and you have to close $500,000 in loans in year one, haven't you just deployed expended $500,000 or not?
Clint, you want me to try?
Sure.
So think of these. So this is again Amber. I think of these PG&Ms as two separate things. One is the award money itself. So you get $1 million from the CDFI fund. And from that $1 million, you have to spend all $1 million of that dollars within the period of performance on an eligible activity. So that is your, anywhere from loan loss reserve to financial products to, up to 15% of the award or $200,000 in an operational expense category, right? So that is those exact funds. That's PG&M 1, hard stop, right? Then you go down to the lending PG&M, and that's the one where we say you have to make financial products or close financial products in an eligible market and or your target market within the period of performance. So 50% at the end of period performance year one and 70% at the end of period performance year two. That has nothing to do with the actual funding that you got per se. It is making financial products or closing financial products in your eligible market and or target market. And that can be done, and those goals can be satisfied with any money on your balance sheet, right? So that is that separation that you're that you were conflating a little bit of those two. If, for example, you got $1 million award and on day one you made $1 million loan into your target market and you allocated the award money to that, then you've satisfied all of your PG&Ms across the board.
Okay. That was my question. Thank you.
Yeah, you bet.
The next question is from Elizabeth Patrick. Your line is now open.
Can you hear me?
Yep.
Yes, we can hear you.
you hear me?
Yes, we can hear you.
Okay, sorry. I'm
That's
with
all right.
the credit union, and this is the first year that we are applying for a grant. And I'm struggling a little bit with the financials. We're looking at 2017, 2018, 19, and our current would be 2020. In the workbook, it's an application guidance book. It says with the credit union, do not use your audited statements, only use from your balance sheet. Because there's a special section in the financial that inputs workbook, just specific for credit unions.
Yeah, so this is Amber. So if you go on to our website, which you see right in front of you on the screen, there is a document called the CDFI RRP Application Guidance. Open that up, and then on page 40, there is, which Clinton is doing now, there is a crosswalk that says financial data inputs for credit union applicants. And this crosswalk, which Clinton is showing you, shows you the AMIS input and where to find it on your 5300 call report.
Okay.
So we have taken, we've tried to make this easy for you and create a crosswalk for you so it's more of a plug and chug. And this is a great question for all applicants that are regulated. We have done this for credit unions. We have done this for bank and bank holding companies, and we have done this for cooperativas that are regulated by COSAC. So every single one of your financial institution types has the specific crosswalk. Did that answer your question?
Somewhat. And I know we have to upload our audited statements along with that?
You do not. Your regulated entities are not required to submit audited financial statements. Only unregulated entities are.
Okay. All righty. And can I ask one more question? I'm still struggling with the eligible market and the target market as I go to my accounting department requesting information and defining it. Is it those numbers from our CDFI certification that I can pull?
It really depends on the activity, and Amber helped me out with this a little bit. It really depends on the activity of your organization. It's possible that all of your organization's activity occurred within its approved target market, or it may be possible that it's not. As Amber has discussed earlier, eligible market encompasses things beyond what's in your approved target market, and there's a geographic component to it, and then there is a component based on low-income individuals, African Americans, Hispanics, Native Americans, so on and so forth. So if you've got additional financial products or activity outside of your target market but falling within a geographic area that we would consider eligible to be added to your target market, or into one of those kind of predefined categories that the CDFI fund considers other targeted populations that can be included in an organization's target market, you can count those as activities occurring in an eligible market. So, for example, if your target market is, Dallas, Texas, let's say all low-income individuals in Dallas, Texas, and you make, 90% of your loans into low-income individuals in Dallas, Texas, that's going to make up the majority of your activity, obviously, but then you also have made loans to African Americans and Hispanics in Houston, Texas, just as an example, very, very broad example. Those loans to African Americans and Hispanics outside of your target market would be considered eligible markets, or loans made to individuals in an eligible market.
Okay, that helps. Thank you so much.
The next question is from Roneen Brodsky. Your line is now open.
Hi there. Thank you all so much for this session today and for all your support throughout the process. I actually have two questions. My first question, and I did post it on the Q&A, so you can disregard the written one, is if we ended up getting awarded less than the amount that we request, will we be able to modify our first payment request before the assistance agreement is finalized? And I base that question off of experience with FA awards as well. And then the second question is regarding the financial product related PG&Ms. Will they be in addition to any PG&Ms that we need to meet for existing FA awards? For example, if we need to meet $10 million worth of financial products and eligible and or target markets in the first year of performance, more or less, and in addition, and that's for the FA award, and in addition to that, we are required by the RRP to do, say, $1 million in lending to eligible and or target markets. Will our total target be $11 million in that period, or will it be just 10? Thank you so much.
So I'll answer the second question first, and then Amber, maybe you can handle the first question. The second question, the answer is yes. You cannot double count a financial product closed in an eligible market or target market to satisfy both PGMs. The first one from your CDFI or NACA program assistance agreement, and the second one from your RRP assistance agreement. So if your organization or the organizations that you work with have any of the supplemental FA awards, think of it kind of in that concept. So the most simple one is, let's say, the Persistent Poverty Counties PPC FA PG&M. If you count it for that PG&M, you can't count it for one of those base FA PG&Ms. Same concept applies. So I'm not sure about your numbers in your example, but yes, you can only count a financial product close for one or the other, not both.
Got it. Thank you.
The other thing that I can point you to is the FAQ has a whole section on considerations for applicants and recipients that have applied and received CDFI or NACA Financial and Technical Assistance Awards. And there's an example there that walks you through how to count this and how to help you understand the overlap between the awards. So with regard to your first question, if you end up getting less than you requested, can you modify the first payment? Yes, but we don't like that because it's going to delay your award. So essentially, if you request $5 million and you say your first payment is going to be $5 million, but you only get $1 million, we will automatically ratchet that down to $1 million. However, if you request $2 million and you say your first payment amount is $1 million, then we are going to give you $1 million.
Got it. Thank you. Thank you very much.
The next question is from Ketty Loeb. Your line is now open.
Hi, can you hear me?
Yes, we can.
Great. First of all, thank you for making this such a streamlined and easy process in relationship to the FA. It's just awesome, so thank you. My question is also about sort of counting expenses and loans. I think you may have answered that, but I just want to clarify that. Is it the expense date or the loan date that would have to be within this effective period? Does that make sense? So in other words, is it just counted that the loans need to be closed or like the expense counted? Does that make sense?
The loans closed. So if you're talking about PG&M2, so anybody who's familiar with the CDFI and NACA program, you are all responsible for submitting a document called the TLR, or the transaction level report. And in the transaction level report, you report on loans closed. So we are not asking you to submit 2 of those. We are only asking you to submit 1 report, and it will help, and you'll be able to parse the closed transactions to the different awards.
Okay, that makes sense.
So think of it as a through line. We collect the TLR. Whatever you put in the TLR, that's what we count, right? So we're trying to make sure that the left hand talks to the right hand, right?
Yeah, great. And then something that my organization is toying with for the sake of equity is looking back at our existing loans and trying to reduce interest rates. So I'm wondering, could this be used? I know it's very flexible, but could this be used to change the interest rates of existing loans and pay those down, or are we only able to use it for brand new loans closed?
So the eligible activities that fall into kind of this category is that it has to be a financial product, right? It has to be a loan loss reserve. It has to be a development service, financial service if you're regulated, capital reserves, right? So what you're talking about sounds like it's structured like a grant of some sort. That's not eligible, but a forgivable loan would be eligible. It has to fall into a category that is pre-approved.
Okay, thank you.
And so make sure whatever use you do, it falls into the definition of a financial product, loan loss reserve, capital reserve, something like that. So it has to fall into the definition of an eligible activity.
Okay, thank you.
The next question is from Tip Birch. Your line is now open.
I had one follow-up question based on an answer you gave. You talked about a financial product could not be used to comply with both the Rapid Response Program and a financial assistance program. Is that also true of something in the Bank Enterprise Award Program?
Yes. Yeah, that's true. We just don't want you double counting.
Okay.
You don't want to double count the financial products closed.
Okay, that makes sense. Thank you.
I'm showing no further questions at this time.
Okay. Well, let's leave the line open for questions. We do have a few questions that were submitted via the Q&A function in the webinar. The first one I'm going to read is from Chris L. And Chris asks, the financial ratio scoring step seems to have changed with the formal CAMELS rating for all CDFIs, not just regulated financial institutions. Can you explain the changes and how we might be able to map if we meet the minimum score of 4 or not? So, Chris, based on your question, I'm thinking maybe your organization hasn't applied for an award in a few years. I'm going to go to the application guidance document for a resource here in just a second. But I'm going to say for our regulated financial institutions, we still rely on the CAMELS or CAMEL equivalent that we receive from their regulator. But for our unregulated CDFI applicants, we have a tool that was implemented a few years ago called the Application Assessment Tool, in which we use a series of ratios to calculate a score of 1 through 5 for our unregulated institutions, so our loan funds, venture capital funds. And we can't share the exact formula in which the score is calculated, but I can say that the score is computed using a series of 23 ratios. And let me find it. There's an appendix that I think I've passed at the back of the application guidance.
And Clint, this is Elizabeth chiming in. I think we might have put that appendix in the evaluation process document, actually.
Here. Thank you. Great teamwork there, Elizabeth, saving me from scrolling back and forth a few more times. Yeah, here we go in the application evaluation document, Appendix A. So you'll see how the individual ratios are calculated. but you won't see the score that a certain ratio is tied towards. And so
we can.
Go ahead.
I was just going to say to give everybody comfort that based on our experience with the CDFI and NACA programs, over 99% of all CDFI applicants pass through this phase.
Yep. And this is in item number 4 on the RRP page, the FY21 CDFI Rapid Response Program Evaluation Process document, which is a great document. You should probably take a look at it one way or the other. But if you're more interested in these ratios for our unregulated institutions, Appendix A. Okay, the next question that we have is from Irene Z. And Irene asks, for unregulated CDFIs, do audited statements need to be submitted at the time of RRP application submission? We currently only have unaudited statements, but can obtain audited statements within 4 to 6 weeks. So if your organization would like to request more than the minimum $200,000 RRP award, you are going to need to submit audited financial statements with your application. If you can get your audited statements before you submit your application by the 25th, go ahead and do that. If not, your organization is going to be limited to that $200,000 award request size. The next question is from Dawn R. She asks, is there any reason to wait to click submit? I'm assuming you're thinking submit on your application. We were waiting on the latest FAQs that came out today and this webinar, but we're wondering if there's any reason to wait to submit. That's up to your organization. I can say that we have had a handful of organizations, maybe more than a handful of organizations that have already submitted their application. If there's anything that you're concerned about or you think you might want a little clarification on around your application, you can go ahead and ask a question via service request or wait for further guidance to come out. But, we don't anticipate any major changes to the design of the program at this point. We're, never say never, but I don't think we're going to change how the award requests are calculated or how the applications are evaluated largely. So,
I can clarify that. I can clarify that with adding on Clint said. Yep. The NOFA has been published. The NOFA is our rule book. We have to abide by the rules in the rule book. So everything is set in stone from the NOFA. So we want to treat all applicants equal, those that have already submitted or otherwise. So, it is what it is at this point. And if you feel like you've completed the information accurately, and then please hit submit, just like Clint said.
Yep. Thanks, Amber. The next one is from Lawrence P. Lawrence asks, for organizations that have both FA and RRP grant awards, can loans be counted for each award's PG&M individually if 2 loans are expended on the same transaction? For instance, a low-income buyer purchasing a house receiving an FA loan and an RRP loan.
So maybe I can take a stab at that. Our CDFI fund is a balance sheet investor. You're not making individual loans. How your organization tracks and accounts for the loans, we do not opine on that. So when we give you, say you get a CDFI FA award, you have to expend the CDFI FA award funds on FA eligible activities and then track them and report them in the use of funds report. In RRP, the same thing. You'll get a CDFI RRP award or a grant. You use that capital and you report in the use of funds report. Then hard stop, again, we're talking about the TLR, the transaction level report. You will submit a report that says all of your closed loans. And in that, it will say you closed $10 million in loans. And you will have a performance progress report or a PPR report. And in that report, you tell us how much progress you've made towards the individual PG&Ms based on your loans closed on your balance sheet. So, for example, say you did a $5 million loan to a grocery store, a healthy food financing grocery store, and your healthy food financing PG&M was only $2 million. You would say 2 of that $5 million was for the healthy food financing, and the rest could be allocated for a different PG&M. I don't know if that exactly helped you. Please ask the operator if you would like clarity.
Great. Our next question in the Q&A box is from Richard P. And Richard asks, how closely tied to the COVID pandemic do loan products need to be in order to align with the expectation that the program supports, prepares for, and responds to the economic impact of the COVID-19 pandemic?
I can take that too, Clint.
Yep.
So there's general widespread understanding that COVID-19 pandemic has disproportionately affect underserved communities and communities of color. And so by default, if you are supporting someone that qualifies as an eligible market, then they have been disproportionately affected by the economic or other impacts of COVID-19. Hey, Clint, there was a couple of questions at the top. You might not have seen it. You can scroll up from Mike Vance.
Okay, sure. I'll read those. So Mike had a few questions related to the application financial data section. The first one is, does earned revenue include or separate from interest revenue? Another way to ask is, does the sum of interest, earned, operating, and government grants equal total revenue? And the second part around operating revenue is, we use a portion of interest revenue, earned revenue, and government grant revenue for operations. Is this just revenue that does not fall into those categories? Again, do the 4 categories of revenue roll into the total?
Andrew, can you answer that?
Yeah, sure. Thanks, Amber. Andrew Schlack, responding to the first question. So yeah, for a typical CDFI, the interest revenue, it's part of your business. It's how you generate revenue. So interest revenue is included for most CDFIs in their earned revenue. And I'll just say that the way that we're using this data, we back it up against your audited financial statements. Again, if you've not been audited and you're providing internally or externally reviewed audit financial statements, we'll back up all these numbers with the data that you're providing. And what we're looking for is the tie between the information that you put in the application financial data inputs and what it says on your financial statements. And for regulated institutions, this ties directly back to your call reports. And so, again, for most CDFIs, the way that earned revenue is classified, it does include interest because that's, the primary driver of revenue. The second question, I think, was related to total revenue. And so and Clint, there's a helpful table here on page 32. It's item 16. And so the definition, all of this rolls up. And again, Clint is providing the reference. And I hope that answers fully the question at hand. And again, we provide this resource not only for unregulated CDFIs, but also there's a crosswalk then that was shown earlier for regulated institutions. And again, what's really important when we do our reviews is that we're basically tying the data that you've entered into the application financial data input. If there's any questions, we need to rely on the objective call reports or the audited financial statements. And so what we're really attempting to do is just to match what is provided in the attachments with what's put in the application financial data input.
Yeah, and building on what Andrew said, one thing that's really important to note is that what goes into your financials needs to match your audit on an unconsolidated basis. So the financials that you put into AMIS and for your CDFI FA program, a NACO program, and the RRP should be of the entity or the CDFI itself, not consolidated. So please make sure that it ties to the unconsolidated, because these funds can only be used by the CDFI itself unless you are a bank holding company. You can't pass on the funds to someone else to complete the work. So again, with like the TLR, trying to keep it all streamlined, you only report transactions that the CDFI itself closed on the TLR. I think we've answered all the questions in the chat. Are there any more questions on the phone?
There are a few more questions on the phone line. The next question is from Mark Edelman. Your line is now open.
Yes, thank you. A couple of questions. Is there an easy way to make an adjustment in an SF424 that's already been submitted?
So great question about that. Oh, I'm going to have Elizabeth answer this. Thank you.
Hi. So no, is the short answer. There's not a quick way to make an adjustment. The piece that I would ask that folks should consider is whether it's a material item, such as, if your DUNS number is wrong or your EIN or organization name, that is going to be a problem. Some of the other fields, for example, I know SF424 asks for a funding start date and a funding end date. In the guidance, we have provided, some parameters on what folks could put in there as estimates, but that, for example, an individual organization's funding dates, if they are successful, will ultimately be set in their assistance agreement. So if it's, one of the key items of your SF424 and it's incorrect, you will need to submit a brand new one and then make sure that you select the correct one. But if it is a less material item, such as the project dates, that is something that ultimately gets determined in AMIS.
But it really has to do with the request amount.
Great question. So the request amount also is considered, if there's a discrepancy between what's on the SF424 and what you put into AMIS, we take the value in AMIS. So if you submitted an SF424 thinking you were going to request a certain amount and have changed your mind, that is not a problem. Just make sure the correct amount is in AMIS, because that's the amount that will be evaluated.
Thank you.
Yeah, just to add on that for anybody who hasn't submitted their SF424, do it now. Do it today. Our guidance that Clint has up on the screen tells you exactly what to put into each of those categories. And like Elizabeth said, you don't have to have your mind made up about how much you want to request. Whatever's in AMIS when you submit your application, that's what's the most important.
The next question is from Mimi Chung. Your line is now open.
Hi, can you hear me?
Yes, we can.
Okay, great. I wanted to know if both sessions will be available for playback, and if so, when? And then separately, if you could go over the formula slides as well. I was a little confused just reviewing it. Thank you.
Yeah, so to answer your first question, the webinars will be available for playback on cdfifund.gov/RRP. You can see the ones that we've already posted on the website are available right now. And then within a couple of days, 2 or 3 days, we'll try to get up this webinar. It just depends on how quickly we get the turnaround on the recording from the service that we use to run these webinars. And Amber, do you want to take a crack at the performance goals and measures one more time?
I think she was talking about why don't we do the formula first? So if you switch to the formula slide and then the two examples, Elizabeth can talk through those.
Okay.
Yes, hi. So this is Elizabeth Hoffman again. Looking at the formula, what I think really helps is to think about the way this is going to work is there's going to be three different groups of applicants. And the first group is going to be that group that requests or receives the minimum amount of $200,000. Clint, if you could go back one slide for me before that. Great, thank you. And then bear with me for a second. We're going to jump down to the third group. That will be a large group of CDFIs will all be receiving the same amount, which we're calling the largest award amount. Although you can request up to $5 million in the NOFA, we're thinking based on the demand, it's not going to be that high. The second group in the middle between this minimum amount of $200,000 and the maximum amount, which we don't know yet, but will be as much as we can get out, is groups that are limited by this provision that a group can only request 150% of the total financial products closed in an eligible market or target market for its most recent historic fiscal year. So, Clint, if you head to that next slide yet, this is sort of, our best projection at the time that the NOFA was made. We were projecting that there will be 1,050 awards made. Using some data that we have on the sizes of CDFIs, if, looking at that, we estimated that about 82 of our smaller CDFIs would be constrained in requesting just that minimum award amount of $200,000. Similarly, we estimate that about 789 CDFIs, or about 75%, will be in the option where they can request kind of the largest amount, which, if in this example, would wind up being about $1.35 million. And then groups that would have portfolio sizes falling in between there would be about another 17%, or about another 179 applicants. I think the thing to stress is that the award size, the largest award, is going to be very heavily dependent on how many applications do in fact come in. The next slide has an alternate example. If there were 800 awards, and basically if fewer folks apply and fewer folks receive the award, then everybody can probably get a little bit more money. In this example, the largest award size for those CDFIs would be about $1.83 million. Let me pause and see if that helps, if that answers your question, or if you have a follow-up question.
I think so. So we really don't know until, you get the largest award amount number. Is that kind of?
So I guess part of it is, whether your organization size, whether you can request that maximum $5 million.
I'm sorry, say that again.
Based on your organization size, are you going to be requesting a small award, or do you have a large enough, financial products close that you could be requesting the maximum amount of $5 million?
I think ours is going to be closer to $2 million.
Okay, so that's a great point. So if a group requests $2 million, for example, in these examples. That would wind up being in that largest award category, which, could range anywhere from 1.8 to 1.3 million. It really is all tied to demand and how many awards we're able to give out. The formula idea basically is after, the groups with smaller awards are taken care of, what's less, we're going to pretty much divide up among everybody who's left, and everybody's going to get something equal.
Okay, got it. Thank you.
The next question is from Vicki Frank. Your line is now open.
Hi there. Thanks for a really helpful webinar. I have two questions. One is, somebody referred earlier to a new FAQ that was released today, and I don't see an updated FAQ after February 25th, so I was curious if I was missing something. And then the second question is, if you could follow up last week on the webinar, you mentioned that forgivable loans will be eligible as a financial product for the RRP. And I was wondering if you could talk a little bit about what that means for the RRP and where I might find more explanation on that. and also how that may or may not differ from a CDFI FA application request.
Yeah, Vicki, this is Amber. So we are not changing the definition of financial products. So this with forgivable loan, if it just falls into the definition of a financial product in the NOFA, that's where it is, and that's the same definition as for FA. The clarity that you may want is that forgivable loans don't count towards meeting your 60% to your eligible market for certification. But we are, for the CDFI and NACA program and the CDFI RRP program, it is based on the definition. So this is not something that we changed or made up. This is just based in the statutory definitions. And again, can you repeat your other question was around the FAQs and when those were updated. I am currently on the CDFI Funds webpage for the CDFI RRP, and it does say 0.7 updated March 10th. So maybe you grabbed it at 8 o'clock this morning. As of noon, it was up there.
Oh, okay, interesting. I'm on the same website, and maybe I have to refresh because it's saying February 25th still. I'm looking at the same page.
Hit the refresh button. Try that because I just pulled it up on
Oh, you're right. That worked. Thank you. I just had to refresh.
Perfect.
All right. Thank you so much, Amber. No, thank you for your clarification. I really appreciate it.
You bet.
The next question is from Rosa Menard. Your line is now open.
Hi. Thank you for taking our call. I just wanted some clarification about the financial products. One lady had asked if they had to be new financial products, and I guess I'm just trying to figure out the timing. Do they have to be financial products originated at some point in 2021? Can they be loans that were originated in 2020, or does it have to be a very specific, like once we get awarded, then it could be financial products that we originate from that point forward?
Yeah, it's that point forward. So the period of performance, so everything's kind of tied to the period of performance and the reporting periods. They're all aligned. So the period of performance starts with the date of award announcement and ends 2 full fiscal years after your 2 full fiscal years later. And so loans closed in that period of time that you would report in your TLR, that is what you can count towards meeting the meeting the PG&Ms. And dollars that you expend towards an eligible activity for funds expended. That's the period that you can expend the funds and for loans closed.
Okay. And then when it comes to reserves, do you guys just mean like we could take some of this money and just allocate like a cash reserve somehow that would go against our loan losses? Is that
sure? Yeah. So you would look at the definition of loan loss reserve, and then as soon as you allocate the funds to a loan loss reserve, that would count. And we do not prescribe what that fund that looks like. That's between you, your CFO, and your auditors, whether it's a cash reserve or whether it's a contra asset reserve.
Okay. Yeah, I just wanted to make sure that if we do use these dollars, that we allocate them and maintain them however we need to maintain them to have it be counted. But okay. Okay, thank you so much.
You bet.
I'm showing no further questions.
Great. I got a couple questions that were asked to me in the chat, so I can take 2 of those. Says, 1, will a TLR be required of a RRP, specifically if we've already received an FA award? Will you be responsible for 2 TLRs? So the answer is no. The TLR report takes everything on your balance sheet, so everything that you've closed. So no matter how many CDFI program awards and CDFI RRP awards you get, you will submit 1 TLR. We've tried to make this simple. I know it's really we're trying to be very, very streamlined in this application, as you guys can see, and also diligent and cognizant of your reporting burden. So there will be one TLR. That said, within the TLR itself, just like for the current supplemental applications, there'll be ways for you to tag some of those closed loans to help us understand how you're meeting the PG&Ms. And then there was a question about SBA TA reimbursement grants considered earned revenue. That is, go to the definitions that we talked about earlier, and you can see what definitions those are. I think. So then there's some other questions that, Clint, do you see the one from Michaela? Do you want to ask that? Yeah. Okay, so sure. Okay, good, great.
Michaela asks, can we submit audited financials for the previous fiscal year to satisfy this requirement for unaudited financial statements for 2020? So this really depends on your fiscal year end date. And we've got information. We've got a handy, excuse me, clicked on the wrong document. We've got a handy chart in our application guidance that'll help you figure out your current fiscal year and your historic fiscal years of application financial data. And so if this question, I'm assuming this question is in response to the requirement that you have audited financials for your historic fiscal years in order to request more than $200,000 award. And so if an organization has a 3/31 or 6/30 fiscal year end date or 9/30 fiscal year end date with final 2020 audited information, your 3 historic years of financial data are going to be FY 18, 19, and 20, and you need audited information for those years if available. And for purposes of the $200,000 maximum award request size for organizations without audited financials, the key year would be FY 2020 that you need audited financials for. You would submit FY 2020 financial information as of December 31st for the current year. And for organizations with a 9/30 fiscal year end without final FY 2020 audited information and 12/31 fiscal year end dates with or without final FY 2020 audited information, fiscal years 17, 18, and 19 will be your 3 years of historic data in which you'll need to provide audited financial information. Again, around that $200,000 cap, you're looking for audited financials in FY 2019, and you would provide FY 2020 financial information as of December 31, 2020 as the current year of financial information.
Great. So there was another question in the chat from Kathy. So Kathy asked, to help us determine our first ask amount, can you please tell me approximately how long after the award announcement you project the first payments will be received by grantees? And then following on that, how long is the typical turnaround time when the subsequent payments requests are made? So let me answer the first question. So you can start incurring quote unquote expenses once the award announcement has been made. So when you talk about your first ask, it's not necessarily super important when you get your payment because you can start incurring those expenses when the award announcement is made. However, how long it takes after award announcement is going to really depend on how long it takes for you to sign and execute your assistance agreement and for it to go through the approval process. So that will all be done in AMIS as well. And probably we expect it to be typical, similar to the CDFI FA program. But we are also going to be dealing with a huge volume, so can't really estimate that. The second question is how long is the typical turnaround time between the subsequent payment requests that are made? So It really depends on when you submit your subsequent payment request. That's also done in AMIS. And you can submit a subsequent payment request as soon as you've expended 90% of the first payment. You don't have to wait a full year until you request that subsequent payment. Anytime you've expended 90%, you can request that. And if you've submitted the right justification and information with that subsequent payment, it takes a couple of weeks to get that second payment.
Do we have any additional questions on the phones?
The next question on the phone lines is from Vicki Frank. Your line is now open.
Hi, it's me again. So I just opened your FAQ, thank you, and it's looking like for a 6/30 fiscal year end, for a CDFI with a 6/30 fiscal year end, that you're saying the award period date of 2 years will end on 6/30/2023. So that's, I guess, assuming that the award will get announced prior to 6/30/2021, so they'll have 2 full years after that?
Yes. That is assuming it happens before that. If, however, it happens after that, because the NOFA does say that we would be making award announcements before the end of September, then it would be more like it would tack on another year.
Okay, thanks. I was wondering if that was a hint to when we might get an award announcement, or I'm definitely working with a couple 6/30 groups where they feel like they're right on the line there.
Yeah, I can't give that away. It is our expectation. These are intended to be rapid, but they're intended to be rapid, but we can't promise anything at this point.
Thank you.
The next question is from Eva St. John. Your line is now open.
Yes. I was just wondering where I can locate the definition of financial products. Hello?
Yes. Thanks for your question. We have for all of our organizations at the back of the document, the application guidance document, in the appendices, information around the application financial data inputs that include notes and guidance. So this would be a great place to start.
The other place that you can do that is in the NOFA, or the Notice of Funding Availability, on Table 3. It says CDFI Rapid Response Eligible Activity Categories, and it says the eligible activity, and it has the subsequent eligible activity definition right next to it.
Okay. Okay. Thank you.
I'm showing no further questions.
We had some more questions in the chat from Rosa about clarifying the financial product. I think we answered that question. So, Rosa, if we didn't answer that, please chime in. I think we also just answered Amanda's question about the expected award announcement date. So I'm not going to do that. Amanda, if you have another follow-up question, just chime in again. And answered those two.
This is Elizabeth jumping in. I also just want to remind folks, as you're continuing to look at these, and if you have further questions in the days ahead, please submit a service request through AMIS. Is really the best and fastest way to make sure your question gets to us. Using the general email or the general voicemail, that is an additional layer of routing. So if you submit your service request, there's a new program dropdown. You can tag it right to CDFI RRP, and it will get to us. So thank you for using that feature.
I do see one additional question that just came in a couple of minutes ago. It says, one of the eligible activities is capital reserves, and this is only available to regulated institutions only. What about for-profit CDFIs? Can they also use the RRP for capital reserves? And the answer to that is no, only regulated financial institutions can use a portion or all of their award for capital reserves.
So Mike Vance also submitted some more questions on the clarification of earned revenue. I think it's too detailed really to respond. So Mike, I want to provide you excellent customer service, and so I really would ask you to submit that via a service request and through your AMIS account, and we will make sure that you get responded to right away our goal is within 24 hours of the response. So there was another question that came in from Richard about, do we need to identify the portion of funds that is awarded that we anticipate expending, expending in the approved categories, or are we able to solidify our strategies once we've noticed of awards? That's a great question. So the good news is the CDFI fund is trying to be extremely flexible. We are telling you all the eligible categories that you can expend the funds, but you notice in the application there is no quote-unquote line item budget. That means that the CDFI fund is, again, we are investing in the CDFI's balance sheet. We are investing in you as a CDFI to respond to the needs of your community and your business strategy. That said, you can use the funds in any eligible category, and we're telling you all the categories that you can use it in, and then in your use of a funds report or the uses of award report that you are required to submit, you will then tell us exactly where you spent those funds and make sure that you just have your documentation on where you spent those funds and allocated those funds. I don't see any other questions in the chat. Do we have any else on the phone?
I'm showing no further questions on the phone lines.
Great. Well, we really appreciate everyone for joining us and asking such great questions about the CDFI Rapid Response Program. We're going to wrap things up for the day. As has been said a couple of times already, we do intend to post this to our website at cdfifund.gov/RRP within the next few days if you'd like to review the presentation again. And if you've got any further questions that pop up over the course of the next week or two about RRP, please go ahead and submit a service request via your organization's AMIS account and ask that question. We'll get back to you as soon as possible. And continue to monitor the documents on our webpage because we may update them. The FAQ document is somewhat of a living document at this point. So it's a great resource for you to keep checking in on over the course of the next couple of weeks. So
this is Amber, and I just want to finish this up by saying that, Clint mentioned they've already had a handful of applicants already submit. We have even more, like 99% complete in AMIS, and we would like to say that it looks like it can take, around, 4 to 8 hours, even less, 1, hour, 4 hours, something like that, but not a lot of time to submit this application. It is, intended to be extremely streamlined. As we mentioned, there's not even projections. So that being said, take this Friday. Submit your SF424, complete the application, and then you can have it submitted and feel good about yourself. Don't wait to the last minute. The key deadlines that I want you, if you have pen and paper in your hand, is March 22nd. That is fast and furiously approaching. That's the SF424 deadline. Don't wait. All the information you need, do it now, and then it's done. So again, say it takes 4 hours to apply, do it this Friday. That's not to intend for you to take that and procrastinate until the last minute and say, oh, I can do it later. Just do it now. We really want to support the CDFIs, and the only way we can do that is if you apply. So I'm really happy that I heard some people that aren't familiar with our programs on the call, because we want you to have a great experience. This application was designed so you don't need external consultant support. We understand that some people do that, but it's really intended to be a streamlined, transparent non-competitive way to get money to you because you do such great work in your communities. Everybody in the CDFI program team and the CDFI fund comes to work because of the great work that you do. So thank you. And with that, Clint, you want to wrap it up?
Yep. Thanks, everyone. Amber, great reminders. March 22nd, SF424 deadline. Get it in ahead of time. Every year we've got some organizations that have something go wrong at the very last second. It breaks our heart that they can't apply. And then once you get that done, March 25th at 11:59 p.m. is the deadline for submitting your RRP application. But like Amber said, this is an application you can get done relatively quickly, so go ahead and do it. Thanks, everyone.
There's no
really appreciate
prize
it.
for the last one in. There's no
That's
prize
right.
for the last one in. And we've seen people go down to the seconds, and I'm having applications for you, so don't do that.
Thanks, everyone. Really appreciate your participation today.
This concludes today's conference. All participants may disconnect at this time.